What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. It's a 3-day weekend for some people, but I was just at the dentist and they scheduled me another appointment on Monday. So apparently some people don't have Monday off. And if you do, it's a great day. And it's also great because it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart founders from all the major FAANG stocks. We are just 5 days away from hearing from NVIDIA, and so is the entire AI market. Better not waste any time. Why we kick things off like we always do with Meta Platform. So the week at 471, shares of Meta Platform roughly flat, up about 0.4%. Finish the week at 473. The company elected Hock Tan of Broadcom, CEO of Broadcom, and John Arnold. Now, interesting tie-in. I don't know much about John Arnold, but I do know a lot about Hock Tan. This guy is absolutely a legend as it relates to mergers and acquisitions. So it could be that Meta is looking to go that route, maybe get some advice there. Hock Tan's just legendary at that and has done a great job over at Broadcom. The other thing Hock Tan is great at is custom silicon. He's doing a great job over at Google, and my guess is Meta has a lot of ambitions there, and so the tie-ins obviously fantastic. Meta is passing down Apple's tax on its App Store down to advertisers, as if you pay to boost your post. So you're on Instagram and you pay to boost your post. If you're doing it through an iPhone, Apple's collecting as much as a 30% fee. So every dollar that you pay to boost your post, 30 cents of it goes to Apple. Now, Facebook and Meta is going to have some workarounds. So if you want to boost your post, maybe there's some other ways to maybe have some payment options that doesn't include that 30% tax. But if you decide not to, well, you're going to have to pay it. I don't really like this. I'm obviously pro-business, freedom of business, deregulation of business. But I don't really like this by Apple, because most of the people boosting these posts, these aren't influencers trying to get more popular. These are cooking brands, clothing brands. These are small businesses that are trying to boost their presence on these social media sites. I just think that Apple's stranglehold on this app tax, it's got to come to an end at some point. Now, moving on to Apple. Start the week at 187.95, down about 3% to finish the week at 182 and some change. Apple's supply chain checks in China show a clear stabilization of demand. That's according to Wedbush. Now, a stabilization in demand doesn't mean that we're on the uptick, but obviously to have an uptick in demand in China, we've got to have a little stabilization first. Now, we got some news out of Nike this morning that the company is, I think, laying off about 2% of its global workforce. That's probably not a clear indication that China's on the rebound anytime soon as it relates to the consumer. We'll see what happens going forward. Now, Apple Vision Pro is monetizing its apps at a higher rate than the broader App Store. This doesn't seem like a surprise to me. You buy one of these brand new shiny devices for $4,000. What's the first thing that you're going to do? You're going to look for apps to buy and to entertain, and maybe even reinforce the fact that you just dropped $4,000 on a set of ski goggles with some cameras on it. Now, what we're also seeing is some Apple fans are starting to return their Vision Pros as they're complaining of headaches, motion sickness, the fact that the device weighs a ton, a bursted blood vessel in your eye. That doesn't sound good. Among other symptoms, I think probably the primary symptom is you buy this thing for $4,000. It feels so good when you buy it for $4,000. Then you try it on and you test it out for an hour or two, and it still feels good. But after several days go by, you realize, is this thing as good as my phone? Does this thing replace my laptop? Does this thing replace even like a desktop computer? And the answer is probably not. And it's about 4 times more expensive than all those devices. Now, if this device costs $200, $500, even $1,000, $1,500, I think we'd be having a different discussion here. I think this is an amazing device, but at the price point that it's at, it still doesn't make any sense to me. Now, Apple is ready to move on to a new AI tool to compete with Microsoft's GitHub Copilot. So Microsoft GitHub is, I believe, wholly owned by Microsoft, and there's a Copilot product on there that it acts very similar to like ChatGPT in that it'll help you with your coding. Now, with coding in general, I have found that the ChatGPTs and even the Google Bards, they are very good at basic coding. Any kind of HTML, jQuery, kind of simple stuff that goes kind of like front-end website stuff, it can knock it out, and it can do so relatively competently. Anything medium to advanced in terms of skill level, and it's still not there, still not close to being there. Can certainly help you out, certainly get you in the right direction, but it's not perfect. Now, Apple has its own code base called Xcode, which powers a lot of its code base for apps and things like that that run on Apple devices. Apple ready to roll out an AI tool that will help you code in that language certainly will be popular from a developer perspective, but wouldn't move the needle, I don't think, from a revenue perspective for a $2.8 trillion company. Moving on to Amazon, start of the weekend, 174.61. Shares of the e-commerce giant down about 3% to finish the week at 169.51. Amazon's Jeff Bezos is unloading a clip, and that's in terms of shares. He's in Miami. He's catching those sun rays, and he unloaded 4 billion shares of Amazon and another 2 billion chunks, according to a report. I think we had rumors last week that he was looking to do about 8 billion. So it looks like he's either all the way there or he's very close. Now, really rich headline here because Amazon is calling the National Labor Relations Board, quote, unconstitutional. Now, newsflash to all of you out there, I'm certainly not an attorney. I'm certainly not a constitutional attorney. I'm certainly not a scholar of the Constitution myself. But I think it's rather rich that Amazon, one of the largest employers, if not the largest employer in the United States, at least from a public company perspective, is firing back at the National Labor Relations Board for being unconstitutional. Now, the Labor Relations Board is just simply doing its job. It's looking around the country, trying to find large groups of employees that it can unionize. Now, is the Labor Relations Board, do they really care about your workplace safety, your salaries, and all that stuff? No, they don't care. They're just trying to collect a check off every one of your salaries every single month. That's all they care about. And I'm totally fine with that. If people want to vote to give a union board and some people some power and pay them some money, that is fine. But companies like Amazon, SpaceX, and even Trader Joe's argue that NLRB's very existence is unconstitutional, and we'll see if the lawyers have any success arguing that in court. Moving on to Netflix, start the week at 560 of 4.26%. Finished the week at 583. This thing's defying gravity from a technical perspective on basically no news. Now, moving on to NVIDIA, start of the week at 729 and change. I gotta scrub my glasses because I've never seen NVIDIA stock go down. Shares of the AI chip maker down about 0.5% to finish the week at 726 as we head into earnings next week with NVIDIA. Now, across the board, we saw UBS, many other, I just pulled up one of the headlines, everybody raising their estimates and their targets ahead of earnings for NVIDIA. So I got to imagine these big bankers, they got tipped off, and I don't think it's going to be a newsflash next week when NVIDIA beats and raises. Now, company formally reported stakes in ARM Holdings, which is a public company, along with SoundHound AI, among other biotech companies. These investments are already known, but for some reason, when the company made this public this week, shares of those companies reacted very violently and positively. It just goes to show you, while information on Wall Street is readily available, it's not always the most efficient and perfect market, and investors pick up on things at different times. Now, a sign that the AI market is still on fire and is not slowing down is you had Applied Materials, ticker symbol AMAT. Shares of the semiconductor equipment makers surged on AI, Internet of Things, as that boosted the Q1 results and the guidance. Shares of AMAT up over 6%. Other semiconductor stocks followed suit. Moving on to Google. So the weekend, 148 and some change. Shares of the search engine giant showing a little struggle, down about 5.4%, finished the week at 140.52. Now, the company owns these Waymo robo-taxis. The last time I was in San Francisco, I actually saw quite a few of these. In fact, every time I went out to drive, I saw one of these things. They're like these Jaguar cars. They got these cameras all over the place. Cameras are spinning. They're all doing all kinds of things. And I'll be honest with you, I would have absolutely no problem getting in one of these, sitting in the back seat, and there's no driver in these. These things are running fully autonomous. If they come pick you up like kind of Uber style, you are getting in a car that has no driver in it. But you know what? Why I would not drive one of these things is the people in San Francisco are absolutely bonkers. They have been throwing things at these things. I've seen multiple headlines here in the Bay Area. Recently, they just set one of these things on fire. Imagine if you're in one of these things and people start throwing stuff at it, try to set it on fire or just try to disable it. It's really strange to me, although San Francisco has always been a strange place, and it seems to have only gotten stranger over the past couple of years. The fact that you have a very tech-forward and actually one of the most progressive cities. For some reason, there's a segment of the population there that hates these robotic taxis. Now, Broadcom, Google, and others are going to support VMware's Cloud Foundation on Google. It's just showing you that Broadcom, why they acquired VMware, probably going to follow some strict rule sets is they don't want regulators poking around any more than they already did. Now, Google slipped earlier in the week, and you actually can see it on the chart. Shares were about 145 and dipped all the way down to 141. That was on the news that OpenAI is said to be working on its own search product. Now, obviously, Bing has gotten an overhaul as Microsoft made its investment into OpenAI, and they've kind of overhauled that product. But statistics show that Bing hasn't been getting any traffic or any more demand than it had previously. I think who this is really good news for is actually Apple, that you might actually have a viable competitor or a viable product that could potentially bid to be the default search engine on the iPhone. That is how you're going to move the needle from a traffic perspective. And if an OpenAI/Microsoft can develop a new product and then bid and successfully win that search engine traffic from Apple, that could be big news. But I still think the rest of the majority of my adult life, which, I guess we could say is another 30 years, cross your fingers, hopefully maybe even longer than that. I still think Google search is going to have a place there. Now, Google's moving quick here. We like the speed that the company is moving at as they launched Gemini as a subscription service. I believe that was last week or the week before. They've already rolled out an improvement. Gemini 1.5, enhanced performance, longer context window, and better understanding. I've just been so busy. I haven't had a chance to play around with a Gemini. So it's on my list of things to do. Maybe with the long weekend, I can get to that. Moving on to Microsoft. Start of the week at $418.96. Shares of the software giant down 3.5%. Do you buy the dip on Microsoft? Talk about that when we get to the technical segment of the show. Shares of Microsoft end of the week at $404. OpenAI Sam Altman said to seek U.S. approval from the daddy for its new AI chipset. Like here in America, we look at countries like China, we look at countries like Russia, there's other countries out there where we think, oh, that's a totalitarianism, it's communism, it's government control. Well, here in the United States, we've got a lot of the same thing. This guy wants to raise trillions of dollars. Let's say he's only halfway successful at that or a fraction successful, and he raises tens of billions of dollars. Why does he need United States approval? Why do we need the government getting involved in OpenAI's investment in the chip industry? NVIDIA has a darn near monopoly on the chip industry as it relates to powerful AI chips. If Sam Altman wants to spend tens of billions of dollars of investors' money to try to compete with them, I don't know why we need regulators here in the United States to give him clearance on that. I wish we had a deregulation candidate that had a chance of winning the White House in November. Unfortunately, we don't. Joe Biden is awful as it relates to deregulation and getting out of the way of companies. And while President Trump's out of one side of his mouth, he sometimes talks about deregulation and kind of reducing the size of government. But the reality is, especially as it relates to big tech, he's not that helpful. And so my hope is after we get these two old guys out of the White House, maybe one day we can get the White House out of the way of American business. Now, Call of Duty is facing a lawsuit alleging a monopoly over its leagues and tournaments. Seems to me you'd have a powerful argument as it relates to Call of Duty, since the NBA seems to have a monopoly over leagues and tournaments of NBA games, same with the NFL, those types of things. It seems to me, though, this calls to the popularity of Call of Duty. Also, the fact that you have leagues and tournaments seems to me this shows that the game is wildly popular. And if Microsoft can continue to curate, I don't play Call of Duty. It's not a game I've played in a long time. But if they can continue to curate that, probably would be great for the brand and the company. Now, OpenAI is set to launch its own text-to-video AI model where you're literally just going to be able to type in something and it's going to create a scene. They showed off a language model called Sora this week, which can create videos up to 60-second long. I saw one with a puppy dog. I saw some other ones that were very, very interesting. What they did lack was dialogue, music, those types of things, but obviously text-to-speech models are coming as it relates to dialogue, music, other things. I think we are going to see a complete revamp of the entertainment business over the next 3 to 4 years with these text-to-speech, video, and AI models. It's going to change virtually everything. OpenAI's founding member, Andrej Karpathy, announced his exit. I think he was one of the ones that pretty much drove Sam Altman out and then kind of regretted it. Well, he's going to move on to personal projects. My guess is he'll be a hot commodity for people looking for AI startups. Tesla started the week at 193 and some change, up about 3.5%, finished the week at 199.95. Elon Musk disclosed a 20.5% stake in Tesla, although I believe it's been debunked, this headline. The fact that the vast majority of this stake is tied up into stock options, which he has yet to exercise. And if the billionaire exercises those stock options to get up to a 20.5% stake, he'd have multi-billion-dollar tax bill. So in some ways, he's going to have to raise that money either by borrowing against the shares or actually by selling them. Now, the board is a mess over at Tesla. You got one shareholder named Leo Kogwan, who says that Tesla is Elon Musk's piggy bank and power base, and he supports the Delaware decision, which came out about a week or two ago, that struck down a large compensation package over at Tesla, which prompted Elon Musk to try to move the incorporation of Tesla to another state, most notably Texas. The other shareholder, the other two largest independent shareholders of Tesla happen to be Elon Musk and his buddy Larry Ellison, formerly of Oracle. We'll certainly keep track of the drama there. Automakers are looking to Mexico to supply EV supply chain across the board, but there is a Trump wildcard. As we move closer and closer to the election, we're still a ways away. We don't have to really worry about it too much. I think it's going to be really close since the last couple of elections have been extraordinarily close. But you will probably have to have some portfolio planning around who may or may not get elected. And as it relates to EVs, you could have a rollback in a lot of the government incentives as it relates to EVs. Also, if you're looking to move your supply chain to Mexico or anywhere outside of the United States, President or former President Trump, maybe future President Trump, returning president, may not support that as much as the current administration might. Moving over to the technical segment of the show, S&P 500 looking still very beautiful, although we did see some volatility this week. If you really zoom in on the last couple of days, you had a large gap down to start the week, and then you kind of had a rally, really nice rally to kind of fill that gap. You've had some other larger candles kind of show up. When you see these large candles show up, it kind of makes me believe you're having like a fight between the bulls and the bears, and eventually one of them is going to give up and lose that fight. I think the bulls, at least in the shorter term, lose the fight. We get pullbacks on the S&P 500. Those pullbacks should be bought. Moving over to Meta, created a gap in the chart, just hanging out. I think you still can be patient with Meta. Wouldn't chase it at these levels. Pullbacks in Meta south of, we'll call it 400 or maybe like 410. That's when you're jumping in. Apple is range bound. You're down here at 166 up to 198. You got a $30 trading range. Now, complicating the situation is you are in a pretty steep uptrend, making higher highs, higher lows. If you do break this trend, technically you are buying it because you're at the bottom of the range, but you will have just broken the uptrend, the higher low pattern that you were making. Also, some people might say double top. I think the first area where you're looking for Apple is about 167, still a ways away from that. Amazon is in somewhat of a similar position as Meta. You've created a gap in this chart. Wouldn't really get excited about Amazon until you got back down below, we'll call it one. I mean, you're not far away, like 165, but with Bezos unloading shares, he has a track record of kind of top ticking this one. Probably wait for bigger pullbacks. There's a great area for Amazon, like back here at like 145, 150. That's like a move the truck, kind of back the truck up moment. Netflix is defying gravity, and so it does give you hope. If you are in the bull camp, this gives you a lot of hope that stocks like Meta, even Amazon, continue their push higher, because you notice Netflix created this large gap, looked like it wanted to backfill, but no, we rocketed back up. This one looks like, obviously, if the momentum continues, you got plenty of upside left in Netflix, probably retesting highs back up here at 700. That would be quite a move for the online streamer. Now, speaking of quite a move, NVIDIA reports their earnings, I believe on the 21st. It's either 21st, 22nd. Sorry for not knowing right off the top of my head. A move higher on NVIDIA wouldn't be surprising. Up to like 900. I could, not necessarily the day after earnings. That would obviously be, that would be a huge move. But over the rest of the year, could you get up to 900? Yeah, absolutely. Pullbacks, just like all of these stocks, should be purchased. Google's in a very interesting position, probably the most actionable position. We talk about how when you're in these uptrends, I'll clean it up so you guys can kind of see it pretty accurately here. When you're in these uptrends, and they're represented by these two green lines, you're in this uptrend. The first area for a buy is at the middle of the trend, which is this brown line. We're about right there. Wouldn't be the place where I back the truck up with Google, but it could be an area where you start a position. You increase your aggressiveness when you're at the bottoms, but just understand, over the last year or so with Google, really the last 10 months, you've had days, because this is a daily chart, you've had like a day or two to pick shares off the bottom of the trend. So unless you're watching this stuff like a hawk, you need to make sure you act at these times, because they come quick. These middle areas, these are areas of accumulation. Again, only in an uptrend. In a downtrend, we're not accumulating, but this stock, longer term is in an uptrend, intermediate term is in an uptrend, short term is more or less in an uptrend. So you're looking to buy the dip, if you will. Now, speaking of buying the dip, Microsoft's dip just a little bit off all-time highs, but this stock is still looking beautiful. Any major pullback, particularly south of 370, that would be fantastic. And Tesla's in the most interesting position. It has been making lower lows, lower lows, lower lows. We talked about, maybe it was last week's show or the week before, shorter term people. And look, sometimes we talk about the short term here, and some people are like, oh, this should be the trading show. No, guys, you can invest in Tesla and have 100 shares or 1,000 shares of Tesla on the side. But I know a lot of people that trade around their long-term position, okay? In fact, that's more or less what a hedge fund does. You can trade and do short-term trades in Tesla. Since you're in bed with the company, you follow it so closely, you might as well make some money also in the shorter term. We talked about how you're making lower lows. This was an obvious area where Tesla would find some footing. It is bounced. Now we're at the middle of the channel. We'll change that line to our official brown color for the middle of a channel. This is where you start peeling it off, trailing stop. You're out of this shorter term position with Tesla. You're out by 228, because if the pattern continues, you're going to get rejected there at 228 and then make a new lower low sometime later this year. Tesla's not out of the woods until you break above the previous highs, which are all the way up here at 260. So you got to go from 200 up, well over 260, probably into like the low 270s to really convince me that maybe this shorter term downtrend is over. Also, the fact that really for 3 years, 4 years almost, the stock has been basically sideways. So you've got to see some price action that jumps you out of this. Otherwise, if you're long Tesla, no big deal. But I would maybe potentially trade around the position, since you have gotten almost zero alpha for holding this stock for any length of time. Folks, that was FAANG Stock Recap Show for February 16th. We'll be back next week for NVIDIA earnings. That'll certainly be exciting. I hope you have a fun and safe weekend. And if you have Monday off, have a great day. See you again next week. Good luck with your investments.